Hello everyone, my name is Sivasankari Dhanaraju. My metric number is 288260. Today I would like to present the summary of MFRS 133. MFRS 133 entitled Earnings per Share specifics guideline for calculating and displaying earnings per share in financial statement. The objective of the standard is to improve the ability to compare performance among different entities and throughout different reporting periods. This applies to firms who have publicly traded ordinary shares or are in the process of filing with regulatory organization for public issuance. MFRS 133 largely emphasizes the denominator in the calculation of EPS. To get the basic earning per share, companies divide the profit or loss by the weighted average number of ordinary shares held by the parent company's equity investors over the given period. Modifications are implemented to the account of post-tax of preference dividend and other impacts associated with preference shares categorized as equity. The standard also covers the handling of different situations such as issuance, repurchase, or conversion of shares and offers guidance on the influence possible ordinary shares on the diluted earning per share. Diluted earning per share account for the impact of all potentially diluted common shares by adjusting both the net profit or loss and the weighted average number of outstanding shares. Dilution of EPS from ongoing operations occur when the conversion of potential ordinary shares lead to a drop in earning per share. The standard outlines the methodology for handling different types of financial instruments such as options, warrants, convertible instrument, and contingently issuable shares. Retrospective adjustments are necessary when there is a change in the number of ordinary or potential ordinary shares owing to the events such as capitalization, bonus issuance, or share split. The standard requires that the income statement include display of both basic and diluted earning per share for each category of common shares with equal emphasis given to all the reporting period. Disclosure encompasses the figures utilized in the computation earning per share, the average weight of ordinary shares, and the information regarding the instrument that may have a possible dilutive effect on EPS in the future. In addition, the standard addresses the handling of transactions that take place after the balance sheet date and have the potential to significantly affect the quantity of outstanding shares. MFRS 133 came into effect for annual periods starting on or after January 1, 2006, replacing MFRS 133 2004 and SIC 24.
Hi, my name is Emilia Ajana Bentin Amzari, metric number 284315. I will talk about three theories that explain the development of MFRS 133. Firstly, normative theory. Normative theory is aimed to lay down a few fundamentals for accounting measurement, specific accounting record, and financial report subject. Normative theory are also considered to be part of deductive theories. According to Para 10 of MFRS 133, basic earning per share shall be calculated by dividing profit or loss attributable to ordinary equity holder of the parent entity by the weighted average number of ordinary shares outstanding during the period. As in Para 31 of MFRS 133, to calculate diluted earning per share, an entity shall adjust profit or loss attributable to ordinary equity holder of the parent and the weighted average number of shares outstanding for the effect of all dilutive potential ordinary shares. Next is positive theories. Positive accounting theories study daily life transactions and occurrence, how organizations account for this occurrence, and the economic effect of those accounting decisions. Given this information, the theory attempts to forecast the way business will account for the forthcoming transaction and occurrence. According to para 70 of MFRS 133, an entity shall disclose these following things. A. The amount used as the numerator in calculating basic and diluted earning per share and a reconciliation of those amounts to profit or loss attributable to the parent entity for the period. B. The weighted average of number of ordinary shares used as the denominator in calculating basic and diluted earning per share and a reconciliation of this denominator to each other. C. Instrument including contingently issuable share that could potentially dilute basic earning per share in the future but were not included in the calculation of diluted earning per share because they are anti-dilutive for the period. D. A description of ordinary share transaction or potential ordinary share transaction other than those accounted for in accordance with paragraph 64 that occur after the reporting period and that will have changed significantly the number of ordinary share or potential ordinary share outstanding at the end of the period if those transactions had occurred before the end of the reporting period. Lastly, the regulation theory. According to regulatory approach theory, accounting standard setting is a highly political process. Even if a proposed requirement is technically solid and rational, it may not be imposed owing to the political power or influence of certain political parties. As in para 68 of MFRS 133, an entity shall report a discontinued operation shall disclose the basic and diluted amount per share for the discontinued operation either in the statement of comprehensive income or in the note. Also, according to para 69 of MFRS 133, an entity shall present basic and diluted earning per share even if the amount are negative. That's all from me. Thank you.
Assalamualaikum. My name is Nur Irina binti Rajasli and my metric number is 288623. Next, I will briefly explain the main parties that involve in development or formulation of MFRS 133 earnings per share. First parties is International Accounting Standard Boards. These are the standard setting body of the International Accounting Standards Committee Foundation. IASB amended International Accounting Standard 33 as part of its initiative to improve international accounting standard. The project goals were to address some convergence concern, decrease or remove alternative, redundancies and conflict within the standard and make other improvement. Second parties is Financial Reporting Foundation. This parties is an independent standard setting body. One of responsible of FRF is in charge of reviewing MASB's performance, finances and financing arrangement. Last parties that involve in development of MFRS 133 earnings per share is Malaysian Accounting Standard Board. This parties is the FRF Standard Setting Organization. One of responsible of MASB is in charge of issuing new accounting standard that have been approved, reviewing, revising or adopting existing accounting standard as approved. While one of objective of MASB is to establish and promote high quality accounting and financial reporting standard. That's all from me. Thank you.
Okay, now let's look at the nature of MFRS 133. MFRS 133 is a principle-based accounting for EPS. Generally guidelines for grid regulation and allows flexibility for diverse business transactions. Flexibility and adaptability. Entities can tailor principle for accurate representation, ideal for dynamic business settings, minimizing the need for frequent updates. The third one is professional judgment. Its compliance require expert judgment and then deep understanding of accounting principles and business activities. The nature of MFRS 133 focus on economic substance, prioritize economy realities over legal structures, enhance a meaningful portrayal of financial status. It also improves comparability, aims to enhance comparability across financial reports, and also provides a standardized yet flexible approach. MFRS 133 is a principle-based accounting standard that balances flexibility, professional judgment, and a focus on economic substance. It also provides a foundation for accurate, adaptable, and comparable financial reporting. Thank you.
Hi, Assalamualaikum. My name is Ira Farhana binti Ahmad Effendi, matric number 288170. I will presenting about the limitation of MFRS 133, earning per share. The first limitation is unable to reflect current market condition. This is because EPS is calculated using historical data and assumption, which may not reflect the current market condition of today. For instance, the standard not adequately account for how changes in market could affect the exercise of earning per share. This may lead EPS figure out of step from current economic condition that is quickly evolving financial market. Moreover, MFRS 133 goal is to provide simple and standardized measure of EPS. This could not reflect the complexity of company financial performance, and this also may lead to mislead the investor. Second limitation of MFRS 133 is it has potential for limited comparability between various companies, especially when it comes to earning per share. When calculating EPS, the standard permit the use of different technique and assumption, particularly in the case of dealing with complex capital structure involving convertible instrument and stock option. Due to this, company may choose to use different approaches according to their situation, which could result in inconsistencies in the calculation and presentation of EPS figures. This lack of consistency makes it difficult for investors and other stockholders to fairly evaluate and measure profit performance throughout the market, and reducing the reliability of EPS as a tool for comparison between companies. Lastly, the third limitation of MFRS 133 is it focuses on short-term performance, which does not necessarily give a complete picture of a company's overall financial health. Company must compute basic and diluted EPS in accordance with the standard, with an emphasis on the financial effect that would be felt right away, such as possible conversion or exercise of security during the reporting period. This short-term view could cause reported EPS to fluctuate, reflecting short-term market conditions or the timing of specific financial events rather than the company's sustainable long-term earning potential. When depending only on EPS figure under MFRS 133, stakeholder and investor should use caution because this number might not fully reflect the wider strategic and operational factors that are essential for assessing a company viability and prospects.
Hi, my name is Mariam Jamilah binti Muhammad Hafiz and my matric number is 288405. I will be present about the suggestion to overcome the limitation in MFRS 133 earnings per share. So my first suggestion to overcome the stated limitation is by enhancing transparency and disclosure in financial reporting. So the company should include the comprehensive explanation and disclosures in the financial statement where it explains their accounting policy standards, methodologies and significant assumptions to give fully understanding to the stakeholders about the company's financial report and performance. So if there are any changes, effect or issue arise, they should be discussed and communicated clearly among each other. Thus, it can establish the credibility, foster accountability and enable stakeholders to make well-informed decisions based on comprehensive understanding on the financial data. Second is make engagement with external users like shareholders, stakeholders, regulators and other parties to understanding their expectations regarding value creation, including their insights in reporting system. So the company can shift focus from short-term earnings to long-term value creation by giving thorough examination of the earnings quality. Besides, the company can clearly state how the selected method and procedures align with the company's strategy and better reflect its value creation of earnings per share. Thus, engaging with external users is crucial to value creation of earnings per share in the business. So my last suggestion is do periodic reviews of reporting practices. So periodic reviews of reporting practices is a systematic evaluations to determine accuracy, usefulness, and effectiveness of the financial reporting approaches. So thorough reviews of these practices is required. The goal is to identify any deficiencies, biases, or opportunities for enhancement in reporting procedures with an emphasis on minimizing intrinsic bias in favor of positive earnings per share growth. So by engaging in periodic reviews, it can show their adherence to transparency, ongoing development, and adaptability to the evolving financial reporting standard, which in turn ultimately fostering trust and confidence among investors and other stakeholders. So that's all from me. Thank you.